Mike. Hello. The Tuesday, June 24th, 2025 HRA Board Meeting. First item on the agenda is the approval of the agenda. Any edits or changes? Nope. We have a motion to approve.
So moved.
Motion by Hukim, second by Doblinger. Any discussion? All in favor?
Aye.
Aye. Motion passes 7-0. Next is the approval of the minutes of the May 27th, 2025 HRA Board Meeting minutes. Are there any edits or changes? May I have a motion to approve the minutes?
So moved.
Moved by Doblinger and second by Commissioner Mua. All in favor?
Aye.
Motion passes 7-0. Next organizational business is approve agreement and appointment for bond counsel and termination of interim agreement. May we have the staff report?
Good evening, Ms. President and Commissioners. Kennedy and Graven had been our bond counsel for many years, and they had a pocket full of staff that did these audits, and they moved over to, all 6 of them moved over to QTech Rock. And so for a while, we've had an interim agreement with QTech Rock. The city went out for RFP and received 4 proposals. We reviewed those proposals and selected QTech Rock for our bond counsel. So the agenda item before you is terminating the interim agreement, accepting QTech Rock as our new bond counsel, and appointing QTech Rock as our bond counsel. So those are the 3 pieces that are in your agenda items.
Any questions? All right. So I need a motion to name QTech Rock as the HRA's bond counsel and to approve the related agreement with QTech Rock LLP and the termination of the related interim agreement with QTech Rock for the same services. So may I have a motion?
So moved.
Moved by Carter
Second.
and second by Commissioner Hukim. Any discussion? All in favor? Aye. Motion passes 7-0.
Thank you.
All right, moving right along. Next is the HRA 2024 Audit Presentation. Thank you.
Good evening. Hi, my name is Andy Herring from Redpath & Company. I'm here to present the results of the 2024 audit. We completed the audit about a week and a half ago now, I believe. Presented the results to the City Council, the Port Authority, and now the HRA Board. The audit is conducted for all of those entities at the same time. So it's one audit for all 3 of those entities together, but they each, of course, have different applicable portions to each entity. So here to present the results, there's 5 reports that get issued as part of the audit: the opinion on the financial statements, a report on internal controls, a report on legal compliance at the state level, a report on compliance at the federal level, and then a communication letter to those charged with governance. So a quick snapshot of the results. An unmodified or a clean opinion was issued. There were no internal control findings, no legal compliance findings. There were 4 findings related to federal compliance, which I'll explain more in a few minutes. And then just standard communications to the HRA commissioners, the governing body. Looking back to 2023, the city, the HRA, the Port Authority all come together to compile the city's HRA Port Authority's financial statements. Those financial statements are submitted to the Government Finance Officers Association to be essentially graded for transparency and consistency with accounting standards. And once again, for the 53rd consecutive year, the Certificate of Achievement in Excellence for Financial Reporting Award was received. So looking at the audit of the financial statements, what we do, our responsibility is to verify the financial statements and disclosures are fairly stated in accordance with GAAP or generally accepted accounting principles and are free from material misstatement. How do we do it? We look for occurrence, completeness, accuracy, cutoff, classification. So occurrence, looking at what has been recorded and make sure all of those items occurred and pertain to the HRA. For example, cash and revenues, verifying it's cash and revenues of the HRA. Completeness, verifying everything that should be recorded has been recorded. And then accuracy, cutoff, classification, verifying amounts are recorded in the correct accounts and the correct funds in the correct year, that sort of thing. We use a variety of audit techniques from analytical procedures where we're looking at relationships to trace into invoices, inquiry of various staff, verifying we're getting consistent answers. So that's how we conduct the audit, and once again, the result was a unmodified or a clean opinion on the financial statements. Then a few risks that we're also looking at, just big, more overarching risks in general, risks relating to management override of controls. If one person were to attempt to circumvent internal controls in place, there's always a risk of inappropriate disbursements, whether that be intentional or unintentional, but definitely a risk that the public funds may be inappropriately spent, so we're paying close attention to that. And then the third there is a little more technical in nature. If there's an expenditure-driven grant, making sure the revenues and the expenses are recorded in the same period appropriately. Those are, again, overarching risks, and those are risks that we identify for all governmental audits we conduct. So nothing specific relating to the HRA, but we are looking at those risks as we conduct and plan our audit. We did not note anything as a result of reviewing and performing the tests relating to those risks. So the next report is a report on internal controls, or the policies and procedures of the HRA. We gain an understanding of the controls in order to design our audit procedures. Examples of controls: approval over disbursements, approval over bank reconciliations, making sure there's an ideal segregation of duties so that no one person has too much responsibility in any given area. And then on the back end, a review of financial information should be occurring to detect any errors in financial reporting. So the results: no findings related to internal controls. And next, there is a report on state legal compliance. There's a guide that the state auditor issues of 7 sections that we complete as part of the audit. As you can see, they're listed there relating to deposits and investments, for example. There's a section on disbursements, on tax increment financing, as well as a miscellaneous provision section. So these are all statutes that the state auditor feels should be tested as part of the audit, so we do that. And the result: no state legal compliance findings. Next, a report on federal compliance. Anytime an entity receives and expends more than $750,000 in federal funds in a year, it's commonly referred to as a single audit, is performed an audit of federal expenditures, and different programs are selected each year as part of that single audit. Somewhat determined, or a lot determined on the size of the program, the risk of the program, and the last time it was audited. So for 2024, there were 3 major programs tested, is the language that's used: the American Rescue Plan Act dollars, CDBG, and Section 8 Housing Choice Vouchers. So again, we gain an understanding of the internal controls and compliance requirements over the program in order to design our tests. How do we do it? We test a sample of federal expenditures for compliance and review other areas to see if there are any control deficiencies. And here's where we've had the 4 findings for 2024. The first one related to the ARPA program. There's a requirement for when a contractor is used before finalizing the agreement with that contractor. So the federal government keeps a list of suspended and debarred contractors, and there needs to be a check to make sure that the contractor used is not on that list, and that check was not performed in 2024. Now, the actual contractor was not on that list, thankfully, but there still needs to be that check that should have been performed. The second, relating to CDBG, there are 2 reports. There's this PR 26 and PR 29 reports that get submitted to the Department of Housing and Urban Development. There should ideally be a review occurring on those reports to make sure that they're completed accurately. A secondary review was not being performed, and actually 2 of the reports did contain errors. Now there's the errors were fixed in subsequent reporting periods, so there's not like there's a penalty or a loss of funding as a result in those errors. Nothing major was reported inappropriately, but there were 2 errors that were detected. The third finding also related to CDBG. There should be environmental reviews conducted for the projects that were selected. And we tested 4 projects, and 2 of them, the reviews were complete. And for 2 of them, actually 1 was then incomplete and 1 was missing. So 2 out of the 4 were not in compliance. And then lastly, relating to Section 8, there is a checklist that's completed to help determine eligibility for the Housing Choice Vouchers Program, and that checklist was not being used in 2024. So that's an aid to assist in eligibility that is beneficial to be used to determine eligibility. As a result of these findings, there's a corrective action plan was written by staff addressing each finding, how they are all addressed, and according to this corrective action plan, they have all been addressed in 2025. So maybe before finishing my presentation, I'll take a quick pause here to see if you have any questions on these findings or if you wanted to make any comments.
Does anyone have questions or comments? Commissioner, oh my goodness, Administrator Abe.
Ooh, I just got a promotion, I see. I just wanted to walk through these findings and note the actions that we've taken moving forward from here. So this first CDBG item, some of the issue here is that the system we use through HUD is generating some errors in its reports. And so we have implemented a secondary review. So from now we'll have 2 people reviewing these reports. We're also going to be reaching out to HUD to talk about some of the errors that are being generated. It's not accounting for program income correctly, just some very specific details on how those are working that we want to work with them on. The second one on environmental reviews, I will note that since we hired a new assistant administrator in December of last year, a big project has been kind of working through process checklists. We did have a lot of transition for staff this year for the HRA, and so we've been working really hard to have process documents, checklists, things like that to make sure that we're going through and implementing all of these things. We're also implementing a new software that will help us make sure we're completing all of those checks on for every loan that we issue. And then finally, for the Section 8 tenant file checklist, this was an issue. We had implemented a new software that was doing some verifying of some of these things that we usually do manual audits on. And so when we implemented this new software, we stopped doing the manual staff audits, but we did notice this issue and correct it. We're now doing the manual staff audits in addition to continuing to use the software. So most of these issues were things that we were aware of, and we took corrective actions even before the Red Path audit, and we'll certainly be moving forward. We'll be implementing these things for the future. So,
Thank you. Any additional questions or comments to that? Okay, please continue. Thank you.
All right. Then the last report is it's a fairly basic report, or more of a letter of required communications from the auditor to the commissioners. It does highlight there was one new accounting standard that was implemented. It relates to compensated absences or accrued vacation and sick, and doesn't really apply to the HRA because all of the payroll is over on the city side. There are a few estimates on the financial statements, nothing too significant on the HRA side. One estimate is the value of land held for resale. If it was thought that value or the resale value was less than, in this case, $871,000, you would have to write down the value of the land to what you believed you could sell it for. But the belief is that no, there does not need to be a write down. Happy to report no difficulties encountered or no disagreements with anybody as part of the audit. Yes, we did have those 4 findings, but everybody was very open about them and was willing to work with us. So there was no contention or anything relating to those findings. And lastly, no material misstatements were detected as part of our procedures. 2 last slides just hitting on a summary of financial information, just a big picture standpoint from 2024. Fund balance did increase about $2.1 million overall. There was a $1.3 million transfer from governmental funds over to the enterprise funds for improvements, and that is highlighted at one of these here. Let's see, it's my second bullet. In total, about $1.1 million of improvements and renovations were made to HRA properties during 2024. There was a $3.4 million loan provided to a project at 700 American Boulevard. About $1.6 million remains outstanding on 2020B bonds. And land held for resale was sold during 2024 for about $1.2 million at 1801 American Boulevard. So those are just a few of the highlights that I'm sure you're well aware of. But with that concludes my presentation. I'd be happy to answer any questions.
Any questions, comments? No? All right. Well, thank you.
You're welcome.
So now I will need a motion to approve and accept the 2024 HRA audited financial statements and related information.
So moved.
Moved by Commissioner Hukim.
Second.
Oh, and second by Commissioner Issei. All in favor? Aye. All right, motion passes 7-0. Thank you.
Great. Have a good evening.
And next is, under new business, HRA-owned rental property maintenance updates and emergency maintenance contract extension. May we have the staff report?
Good evening, Chair and Commissioners. I'm here this evening to provide an update on HRA-owned rental properties. The first component of the presentation is regarding the only aspect of this presentation that that we're requesting approval and a motion by the board, and that's related to extending the maintenance agreement with Renew Homes, and they do our emergency maintenance. The remainder of the presentation is more just for information and kind of setting the stage for upcoming budget discussions for 2026. And just to provide an update due to the extensive repairs that we completed in 2024. Okay, do you mind just... You can advance to the next slide too. Thank you. So just again, some background. There's 42 single-family rental homes within the portfolio in 2024. We invested about $1.2 million in emergent capital improvements across the portfolio. And at that time, we had identified about $400,000 of additional capital improvements that we anticipated in 2025. Another big change in 2024 was a change in staffing regarding property management and maintenance. And we brought property management back in-house and contracted with Renew Homes for emergency maintenance. And that was for an initial 6-month term, and that contract is expiring at the end of June. Oh, it's working now. Okay, great. This slide, I just wanted to share some really great feedback that we've received from some of our residents in the program, really highlighting some of the changes that happened in 2024 and how that's reflected in the lived experience of our residents. Some of the phrases that really stood out to me were like changed for the better, things were handled in a timely manner, there was good communication, it was a positive difference in our living experience. I also just want to take a moment to acknowledge Valentina, who is serving as our property manager. As you can see in the comments here, her approach is very human-centered, and she's really taken a lot of time to build relationships with our residents and making sure that their needs are being met in a very timely manner. So again, the first component of this presentation is that extension of the emergency maintenance agreement with Renew Homes. Renew Homes has been an incredibly wonderful partner. They've built a lot of trust with our residents, and they respond very quickly to emergent situations. They've also just been a great partner in recommending or anticipating future needs at our properties as we continue to build out our capital improvement plan. So at this time, we're recommending extending their agreement through the end of the year, and also adding additional funds to that contract. So the total contract amount for the year would be $174,996. And this is within the budget we had planned for these services for the year. We also plan to roll out an RFP for emergency on-call services that would cover 2026. So we hope to publish that RFP later this summer or early fall. And that would come back to the board, that contract for 2026 would come back to the board later this year. So this is the recommended motion before you this evening, and I'll bring this back up later in the presentation, but this is really what's before you tonight for decision-making purposes. And now I kind of want to switch gears and talk about the maintenance framework that we've developed for our properties. This framework is informing how we do procurement of services, but also how we're structuring our budget and planning for maintenance throughout the year. The first bucket, which we've already spent some time on, is that emergency on-call maintenance bucket, and it's defined there for you on the screen. Our current service provider is Renew Homes, and we do intend to work with them through the end of the year through this agreement extension. The next bucket, I would say, is the largest bucket. It's much more broad and covers all other aspects of maintenance that are non-emergency, and these are making sure that our units remain compliant with housing quality standards and also rental licensing components within the city of Bloomington. This is where cosmetic repairs and also preventative maintenance are covered under this category. We currently are covering this through a variety of different vendors that are come in to do very specific things like plumbing or electrical work and that kind of a thing. The last bucket are those capital improvements, and these are when we're replacing a significant component within the property or doing a substantial unit turn. So think roof replacements, kitchen upgrades or bathroom remodels, that kind of more substantial work. So a few status updates within these buckets that have occurred so far in 2025. Again, we are working on that contract extension this evening, and we plan to open an RFP for emergency on-call maintenance for 2026 later this year. Under the general maintenance bucket, we did complete a first round of requests for qualifications to start establishing a list of contracted entities that have expressed interest in working with the HRA, and so we have a list that we can draw from of contractors that we've already had contracts with for smaller amounts to get that work done very quickly. And we hope to do another round of that RFQ later this fall as well. And then under capital improvements, this work this year has really been prioritized in our vacant units. We've had 8 vacancies. I think that's should be the total for the year, which is higher than normal, but it's primarily due we had a lot of households in the rental homes program reach their 5-year term, and so they have since moved out and moved on to other. A lot of them actually have purchased homes, which is exciting, but that is the largest component of the vacancies that we've seen this year. We've also continued to gather base level data through time of sale inspections. This is work that was started in 2024, and we're just continuing through the remainder of our portfolio. And we're using those time of sale inspections to have a base level kind of understanding of any immediate capital needs across the portfolio in anticipation of a broader capital needs assessment that we hope to also do or start rolling out later this year across the portfolio. I'm now going to move on to talk about spending update and how that's informing our estimates for the 2026 budget cycle. So we're going to talk about both spending or expenditures and revenues tonight. This slide is solely referencing expenditures, and then we'll move on to revenue. I think one thing we were really trying to be thoughtful about this year is staying within our budget and really thinking critically about the repairs that we are completing and prioritizing those most immediate needs and maintaining those list of things that we need to come back to through either capital planning or a little later on down the line. A good reference point that we have started to implement is this industry standard that's listed a little lower down on the screen, which is that per unit cost of 4% of the property value. So on average across our properties, that's about a per unit cost of $12,300. That is estimated we should at minimum be spending annually to maintain our properties. And so we're using that kind of as a benchmark in what we're spending this year, but also how we're developing the budget for future years. As of right now, based on our anticipated expenditures through the end of the year, our per unit cost, and this is including capital improvements, is around $18,300, which obviously is higher than the industry standard. But again, when you look at the age of our properties and some of the deferred maintenance that we're working on catching up on, that's kind of why that cost is higher than the industry standard. 50% of these maintenance expenses are covered through rental income, and so I'll touch on that again on the next slide. But I did just want to highlight the capital improvements that we have planned or have completed so far this year are not funded through our budget. We have identified alternative one-time funding sources to cover those costs for this year, and that is through the HRA Capital Fund and then CDBG COVID dollars, which are really focused on catching up on that deferred maintenance that accumulated during COVID. Switching over to revenues. So again, primarily the revenue for these programs is covered through that rental income. There is some levy dollars going in, but that's only for our rental homes program. Again, that's a fully local program, so there's no other external funding sources for that program. Assisted rental is subsidized through the Housing Choice Voucher Program because those are project-based units. So as of right now, there's no levy support going into those homes. So the majority of these revenues are going towards those maintenance costs that we just saw. It ends up being about 60% of the overall revenue for the program. And then the other 40% goes towards other operating costs, including staff salaries and software, property taxes, and those sort of things. So looking ahead, how this is informing how we're thinking about 2026 is, again, using that 4% rule kind of as a threshold. we're estimating right now about a per unit cost of $14,400 for emergency and general maintenance per unit in 2026. That's kind of the baseline that we're establishing for 2026 as of right now. One thing I'm excited about that baseline is it creates space to have a preventative maintenance budget that operates completely separately from our emergency maintenance budget, which we currently don't have like separate buckets for those type of things. I think we see it as the next big step of being more proactive when it comes to maintenance rather than reactive. And then adding in the capital improvements, we're currently estimating around $150,000 per year is needed for the next 10 years. That brings up that per unit cost estimate to around $17,980 for 2026, which is pretty consistent to what we're spending this year. If you recall from the prior slide, we see this as kind of being that $18,000 number a year, probably about where we'll be moving forward on a year-to-year basis. I don't see that number going down, but we do think it will probably steady out around there, primarily due to the fact that construction costs continue to go up. And so I think that's why we're seeing, or we're hoping to steady that number out around that number. In terms of how we're hoping to fund capital planning moving forward, we continue to research alternative funding sources outside of those already available. The first one that we looked into was POP, or Public Owned Housing Program through Minnesota Housing. Their application cycle for 2025, our application was, we did a self-scoring because they provided the scoring, and we didn't think our application was competitive based on what they were prioritizing in this most current funding cycle, and so we decided not to apply. But it is a potential source because they kind of change their guidelines every year depending on how they're funding that funding source. So not something we applied for this year, but something that we're continuing to kind of monitor as a potential option in the future. Similarly, the Federal Home Loan Bank of Des Moines offers the Affordable Housing Program, and we see this as a really viable funding source for capital planning in future years. And kind of the next step there is completing those capital needs assessments across the portfolio, because that's important information that we would need to include in that application in future cycles. That is kind of towards the end, or we're nearing the end of my presentation. I just want to highlight some next steps in terms of what we'll be completing through the end of 2025. So the first one, again, is executing that amended agreement with Renew Homes to extend their work through the end of 2025. We also will come back to this board through the 2026 budgeting process with proposed budget for both the assisted rental and rental homes programs. And then the RFP for emergency maintenance services, that contract would come back to the board later this year as well. And then those capital needs assessments is something that we hope to roll out later this year. Here is the recommended motion, and that is the end of my presentation.
Thank you. Are there any questions or comments? Commissioner Mua?
Thank you, Chair. Just a question for the RFQ process. Is there a focus or an active recruitment of Bloomington-based contractors?
Thank you, Chair and Commissioner Mua. So not necessarily active recruitment specifically for Bloomington, at least in the most recent round that we completed earlier this year. I will say we also manage kind of a contractor list for the rehab loans program, and a lot of those contractors are either based in Bloomington or based in the area or work in Bloomington very often. And we did send them all notification of this RFQ. So again, targeting contractors that we know work in the area or are interested in working with the city. That was kind of our approach this first time around. So.
Administrator.
Yeah, I just wanted to add a quick note on that. We're also reviewing ways to continue to expand our contractor list. So that's something we're looking at this year is, are there other opportunities to market not only the RFQ process, but also through the contractors we're working with on our loan programs, and are there ways to expand that pool? So that is something we're looking at this year as well.
Thank you.
Yeah, thank you. Yeah, I appreciate that. I love whenever we can keep dollars here in Bloomington and support local Bloomington businesses. So as much as we can expand our list to include Bloomington-based businesses, I'd appreciate that.
Any other questions or comments? Okay. If not, I will be looking for a motion to approve Resolution 2025-17, authorizing staff to enter into a First Amendment to agreement between Renew Homes, Inc. and Housing Redevelopment Authority in and for the city of Bloomington. May I have a motion?
So moved.
Moved by Commissioner Doblinger
Second.
and second by Commissioner Isay. All in favor? Aye. All right, motion passes 7-0. Next is June is National Home Ownership Month, and we have a proclamation to be read. That was going to be at our other meeting that got canceled. So I am going to read the proclamation. So, Home Ownership Month, June 2025. Whereas in 1995, National Home Ownership Week began as a strategy of President William Clinton's administration to increase home ownership across the nation. And whereas in 2002, President George W. Bush expanded the observance for the entire month of June. And whereas home ownership is a major source of generational wealth for many Americans and is an essential part of the American dream. And whereas during Home Ownership Month, we recognize the value that owning a home brings to individuals, households, and communities across America. And whereas by observing Home Ownership Month, we acknowledge the importance of housing, whether owning, renting, or aspiring to own or rent. And whereas through the Housing and Redevelopment Authority in and for the city of Bloomington, known as HRA, current residents and those desiring to become residents can access resources and housing stability and pathways to ownership. And whereas each year and throughout the year, we will foster home ownership creation and preservation opportunities in the city of Bloomington. And whereas to support the city of Bloomington's mission of cultivating an enduring and remarkable community where people want to be, the HRA partners with community organizations to offer Journey to Home Ownership workshops, as well as home stretch first-time home buyer education classes. Therefore, I, HRA Chair Jennifer Mueller, do hereby proclaim June 2025 as Home Ownership Month in Bloomington, Minnesota. All right, and the last item is updates from our administrator.
Yes, good evening, Chair and Commissioners. I just have the one update, which is last meeting we collected that form of availabilities. And so using that form, I scheduled a tentative board and staff retreat it's a Wednesday, August 20th from 11:30 to 5 p.m. Likely we'll have actual activities starting at noon, but I'll send out a calendar invite for that 11:30. We'll start with most likely have some food together. And then the other note is, then I will send a calendar invite, which I already said. So I just wanted to confirm that date works for everyone and make sure you all get it on your calendars early. We will send out that calendar invite later this week, but please let me know if that date is a challenge for anyone.
All right. Thank you. All right. That is the end of our agenda. May I have a motion to adjourn the Tuesday, June 24th, 2025 HRA board meeting?
Move to adjourn.
Moved by Commissioner
Second.
Wooten and second by Commissioner Doblinger. All in favor? Aye. Motion passes 7-0. The meeting is adjourned.